on to our weekly Twitter space slash YouTube live. It's March 27, and we have quite a few things to discuss. We've had a historic bad week from the ETFs. We're going to be covering this, but we're going to be covering a money printing discussion a bit. Also, a $1.2 trillion stimulus package. I kind of did some digging in what's in there, how's everything working, and yeah, what could this mean? Does this mean the money print is going brrr? Does this mean we're going to see crypto? We're going to see Bitcoin at 100,000? Is our I was a bit cautious for Q2. I think Q2 as well. If I'm correct, we can assess, is this off the table? And I don't know, have you seen the cocoa prices? Yeah.
I did.
I wanted to cover all that. So, Fabio, how is everything? Let me know. How's the community? How's
Yeah.
what's going on in the broader crypto sphere?
We could maybe we can make a start with let's say money printing, macro, and then work our way into crypto.
Sounds good.
So maybe I'm gonna hit us off with a quote, and I sadly I don't know who said it. I think it was either Naval or Ray Dalio, but the quote itself it's sticking with me. So he said, or one of the two said, risk is what remains when you thought of every potential scenario,
Yep.
and it's funny because we spend a lot of time speculating, looking at news, assessing risk, or making an educated guess what the future might hold. And we're doing this every single day. A lot of people say, okay, investing is gambling and speculation, but everything in life is. If you leave the door in the morning, if you take a staircase or whatever, everything is risks, and doing nothing is a risk as well. So I was thinking about that quote a lot, and making a bridge into the money printing situation. Maybe before I'm super interested what you make of all of that, but maybe for the audience, I just want to bring up one thing when it comes to inflation and money printing, because a lot of people might not actually know that there is at least three ways how new money gets printed or the money supply increases. And some have a bit more of an impact on asset prices and on the consumer price index, and others don't. So the three major ways are credit creation. So that's done by banks. Usually, if you apply for a mortgage or a loan, the money is basically they basically press a button and create the new money in form of debt, in form of credit. The other one is, of course, quantitative easing, and this is it's basically the Fed that is buying assets. And then the third one is fiscal deficits, and this is what is happening now. It is basically the government, in this case, President Biden, the Democrat, printing money in form of T-bills. So they issue government debt, and they're doing this at unprecedented rates. So we are back, I think, even above the levels we had during the pandemic in 2020. And back then, just, I think everybody remembers, but I just want to bring this up one more time. Back then, they were basically, this is an emergency and it's a once in a lifetime scenario. This is completely out of the ordinary. We need to basically turn on the money printer. We need to issue debt to kind of save the economy, to keep things running. And I don't really know what the emergency is right now. Is there an emergency? Why do we really need to have that much stimulus and that much T-bills issued? And maybe you can give us a little bit of insights in what's actually in this bill, and maybe you even have a theory on why this is happening. And then maybe after that, I would love to add what might be happening in the future after the elections.
Yeah, I think So I read into this a bit, just because I really wanted to understand, is this exactly the same as what happened during COVID? And so I want to put some perspective on this, and maybe as much upfront. Part of it has some resemblance, other parts of it are very, very much different. First and foremost, this bill is actually not a new thing. This is actually from, I think, 6 months ago, or at least from last year, and was highly debated and was like in quite a highly debated topic as a whole. At the end, it received bipartisan support in the US. So that means both parties actually supported it. And this was actually required because you needed a two-third approval. And so at the end, it was 286 over 134. 185 Democrats voted yes, and 101 Republicans voted yes. So 112 Republicans voted no, 22 Democrats voted no, 12 members did not vote. And then at the end, the Senate had to approve it unanimously, and then President Biden had to sign it. And so it was a bit of actually a bit of a leftover from last year. I think of the frustration with the entire thing is a couple of things, and that is really, really key when we look into what is in there. A lot of it in there actually makes sense from, hey, the border gets secured. There are a lot of things that are really relevant when it comes to the security, to military spending, and so on. Now, other parts, and again, this is obviously very which party you belong to, are some of those things are more benefiting the outside. Obviously, there's a focus, as always, on various wars that are going on. So there's going to be a focus on this. And at the end, a lot of people are missing what they call a lot of focus on the domestic spending. So a lot of people have been missing that, right? And just as a reference, right? So we're talking here $1.2 trillion. This is the entire spending that was done during COVID as stimulus, and it's about 5 trillion. So this is during the entire COVID years of 2020 until 2022. And so if you add all this together, it's about 5 trillion. And so a couple of things you can see here is 1.8 trillion was really focused on individuals and families. 1.7 trillion focused on businesses. And then the other things, right, are what a lot of people would call, well, not really the domestic side. So state and local aid, right? So some of that can be seen domestic, some of it is maybe military, some are other things. Then healthcare, sure, part of this is domestic, but part of it is just really something you need. Other as well. So just some reference and some perspective, right? And if we kind of break this down, for example, this is one of the packages that I kind of split apart here, 1.9 trillion. If you kind of look at this, right, it is a very, very different kind of layout to what this 1.2 trillion package looks like. Alone, the $410 billion in stimulus checks, none of that or none of these similar things are in this 1.2 trillion. The unemployment things, right, none of that is in there. So I just want to be very, very clear that obviously any kind of money printing, any kind of stimulus, at the end, it somehow hits the economy and it does obviously stimulate. And that is the idea of that package, right? But it is a bit different. And the 1.2 trillion cannot be seen as one for one when it comes to inflation to the dollars that got printed during the COVID years. Now, at some point, they will hit the economy and at some point, they will cause inflation. But it is a bit of a different kind of speed and a different kind of impact. And I think that is really, really important. A key concept, though, right? And I want to always bring this up. A lot in investing and a lot in the financial markets in general are about the confidence of the future, right? So the more confidence you have about the future, the more you're willing to make some bets, the more long time horizon you're going to have. And so generally, people are willing to take riskier bets, more volatile bets, right? The more confident they are. If they're really, really worried that next month they're going to lose their job and they may not have any income, probably they're not going to gamble their last $1,000 on some new coin. They probably going to play it a bit safer. But if they kind of guarantee that for the next year they're going to have a job, and if they don't have this job, they're going to find 3 other jobs because the economy is doing so well, obviously that is a bit a different story. So summarizing from my perspective, I don't think the 1.2 trillion are the same stimulus as we have seen as 1.2 trillion during COVID. I don't think that's one for one. So I do think it's going to have way less of an impact, but it will have a stimulating impact. And so it's definitely more than zero, but it's not the same as 1.2 trillion during the COVID years. And so that is obviously very important. Now, still, people will feel more confident. And so I do think the odds of a recession in Q2 have dramatically gone down. I think all of this right now really aligns with what the election cycle wants to see with the US election in the US. And I think that really kind of goes into the soft landing kind of approach a bit. The big risk, and we've discussed this so many times, and we can discuss this again. The big risk is this entire concept of stagflation, where we constantly have inflation, interest rates up, recession, printing, stimulus, and this entire kind of wavy function. So that is a bit of the worry that I have with all this. Nothing new about this package. I want to be clear. Actually, a lot of this was already discussed 6 months ago. It got a bit rushed, and I think that's where a lot of the frustration comes from. And so that's a bit of the summary and a bit of the insights. What are your additional thoughts on what I shared?
Yeah, so I'm fully aligned with that. This is not going to have as drastic of an impact, especially to consumer price inflation, and probably also not asset inflation. But it's definitely not helpful for the United States. Look, the United States is more than 100% debt to GDP in debt, and usually there it's pretty hard to recover. And we are seeing this in Europe, and there is this underlying trend. And in my opinion, it doesn't matter how the election is going to play out. Both candidates will provide free shit to so they're going to spend money, they're going to go in debt to kind of alleviate the pressure. So all of us, or not all of us, but the lower middle class and the working class is definitely being squeezed right now. It's harder to get a second car, to go on vacation, to maybe buy meat in the supermarket, and things like that. Like the tiny bit of luxury that most of us could enjoy 10 years ago is for a lot of people out of reach. And there is two things that kind of uh, in my opinion are going to be the main theme of government spending over the next 4 years. So on the one hand, the underlying issue is a demographic issue. So we almost every Western country has a negative fertility rate. So for two grown-up adults, you need to make 2.1 kids to keep the population afloat. And almost none of the Western countries have that. The US is doing a bit better than we are here in Europe, and in Asia, like Japan or South Korea, it's terrible. So what the left thinks is the solution to this is immigration. They think, okay, we just import these people, and while we're importing them, we also kind of help the economy. But not only that, because immigration usually votes for yes, so for the left. So they think, okay, let's import a few people. They're going to vote for us, so we're going to strengthen our foothold and kind of go this way. And in a lot of countries, in the US right now, and also in Europe, there is another strong group building on the right that says, hey, we want to preserve our culture, we want to preserve our values. We see an uptick in crime and so on. We don't want uh, let's say immigration, but how do you get more people to make more babies? So there is a lot of talk, for example, in Switzerland or in other countries here in Europe, where you kind of stimulate and give money away for people to make kids. And both ways are somewhat inflationary and will, there is a lot of money printing or debt going to happen because, yeah, it's very different right now. And the main difference, in my opinion, is um, governments 40 years ago, 30 years ago, when there were a lot of highway and train building and infrastructure building, these bills and these results translated into economic growth and into more trade and eventually more tax dollars coming in. So they basically paid for themselves. A lot of things that we are doing right now are in no way paying for themselves. I mean, spending money on a border patrol is not going to create economic value. And the same thing here in Europe. A lot of money that we are spending is not going to help us um, actually growing. Yeah. So the point I want to make, I'm gonna I I love Arthur Hayes. Is one of my oracles, let's say, and I listen to almost every content piece that he's putting out, his blog and his podcast. And he mentions a lot of times that we are living in a different time now. There's going to be so much money printing in different kind of forms, and you want to own risk on assets. You want to be in tech. You want to be in AI. You want to be in crypto, just because this is what is protecting you against all of the spending. Um, the difference. So if you look at mid caps and low caps, like the Russell 2000, they're actually not doing well, like utility companies, normal companies, they're not doing well. If you look at an index, S&P 500 or Nasdaq, everything is making all-time highs, and it looks like the economy is doing amazing. But it's just a handful of companies. It's just the Magnificent Seven. It's tech companies. It's AI companies. And if we're not seeing a recession, which you hinted at, and I'm also kind of lowering the odds for myself that we are actually seeing a recession, you definitely want to hedge yourself with some tech stocks, some AI stocks, and crypto. What are your thoughts on, let's say, more debt, more credit, more money printing over the maybe this year, next year, and the following years?
I mean, again, I am not a politician. I don't think I would make a good politician, and I wouldn't have policies that would be popular, but I think would be necessary. So I would probably not do money printing, and but it's just a painful. I mean, everyone says that when they are not voted, right? Everyone says that up front, and then they all money print, and the reason is just because it's so much easier. You don't have to tax people. You don't have to take more money from people. You just basically devalue their current money, and and people are happy on top of it, right? You give them free money and they're all happy, and they don't understand that at the end you're just devaluing everything else. So I mean, I would love to say that as a politician I wouldn't do that, but I wouldn't. I don't know. I wouldn't trust that statement because I'm not a politician. So um, don't judge an operation you weren't part of, and I think that's so hard. It's one of the rules in at the army. Don't judge the operation you're not part of, because it's so difficult sometimes to judge it. Because yeah, the stress situations, or like making a decision to spur of the moment, I think it's so difficult. So look, I would love that, and I said this so many times, I would love that the money printing does not come. I think we have a massive risk of stagflation. I think that's one of the hardest environments to invest in. And yeah, I do see why we're going down this road. And it was the most likely outcome that I had discussed so many times. And so, yeah, it's a bit sad that we're going down this path. And I mean, look, I think Arthur Hayes is probably right there in saying, hey, look, you wanna hold some really risk on assets. Makes sense. So I think I think it's a solid choice. Did you look at the crypto markets over the past week since our last update? How's that?
Yes. So the main topic, of course, would be massive outflows. And here I follow Willy Woo. I think he's a great follow on Twitter. He does great analysis on on chain things on ETFs. But with his last few tweets, I would point out that, in my opinion, he was wrong in one point. So if you look at ETF outflows, a lot of people say, "Oh yes, see, first dip, and we saw massive outflows." But one thing, a caveat to that is, it was mainly GBTC outflows. It's not the new ETFs. So it's the newer ETFs actually uh, had more or less inflows. Like there's, I think, one ETF that had outflows, or two. Besides, yeah, one. Which one is that? You're highlighting it on the screen, March 20th, and
I don't know
it's
who that is. BTCO. I don't know.
BTCO. I also don't know. A smaller ETF had outflows. So actually, the boomers that are buying BlackRocks and Fidelities and Bitwise's ETFs, they kind of have strong hands, because we haven't seen massive outflows there. It was mainly GBTC that that was selling. and the people that are actually buying are, let's say, plebs or retailers that buy spot ETFs on exchanges. So that would be the my comment on the ETFs outflows and the dip that we saw. That, by the way, got a pretty strong recovery
Major
right after.
recovery,
Yeah,
major recovery. I mean, I do think a couple of things that are a bit on the weaker side. We've seen this last week, where really the inflows into BlackRock were really weak on some days. I think that was a bit on the weaker side. But other than that, I agree. Especially, I mean, yesterday, 26th of March, it seems to really have recovered. We're back quite strong, and I think part of that is really why also the buyback was so strong, driven by that weird news. Did you see this news part? I didn't add this into the slides about this Australian, I think Australian, right? If I'm correct, Australian
the
Bitcoin
gold
mining
miner.
company, gold mining company that said they're gonna put, I think, 28,000 bitcoins, or they're looking into putting 28,000 bitcoins onto their balance sheet, and the
A
stock
letter of
completely pumped.
intent.
Letter
Only
of
a letter.
intent,
So
man.
maybe to add some context. So this is
Seriously
really a penny
considering. They were
stock,
seriously considering. That's basically what they were doing. Seriously
and
considering.
it's a penny stock of a business. They don't even have that much money, I think. And it's a super small stock, and nobody ever heard of them. And they did a letter of intent. It came onto it was on the Bloomberg terminal as news, and it got, of course, shared wildly all over Bitcoin crypto Twitter. And I think the next morning the stock ripped
It's insane.
1,900% to the upside.
It's insane.
Um, Crazy.
Yeah, today the
But
CEO stepped down. I think now there's like market manipulation. I mean, I don't know. Like this is gonna. I mean, dude, like that's gonna have massive consequences. I don't
so
understand what these people are thinking.
two things I would be very much interested on your opinion. So we, of course, we saw Michael Saylor. He right now he really looks like a genius. Like he's playing. So the basic plan that he's basically, just to summarize what he did. So he basically found this cheat code that he can issue debt via this corporate vehicle at a very low rate. So his average is somewhere between 2 and 3% what he pays for the debt. He has a cash flow generating business. He buys an appreciating asset and he's basically selling or he's shorting the dollar and he's longing Bitcoin. And a company with like 100 million cash flow is worth 14 billion, which is crazy.
It's
So,
insane. Yeah,
and the first part of that, he basically lured in people with a retirement account that couldn't get ETF exposure to Bitcoin, so they were just buying MicroStrategy. I did this myself, and many others as well. But right now with the ETF, it's kind of the second part of this game, and the second part is let's go and get passive flows via an S&P 500 inclusion and kind of keep growing in this direction. And of course, with the growth of the company, he can issue more stock and buy even more Bitcoin. Do you think, firstly, what do you think about his strategy? And do you think this is a one-time play, so there's only one that's actually going to do it? Or are we going to see uh, others that are copycats that are going to follow this approach and trying to kind of mimic his success?
I think it's difficult. I think they're gonna try, but I think it's difficult. There, I don't. I think there's just space for one. I mean, it's a commodity at the end, right? You're not inventing anything new. So yeah, and he does it best. I think he does it well. Yeah, I mean, I was a bit skeptical. I'm still a bit skeptical at the moment. He's really selling his stocks massively. I understand. I mean, there's no criticism on this. I think he deserves it, but yeah, let's see where this all ends up. That's a bit of my concern.
So maybe one comment, like of course, in my Bitcoin echo chamber, people that I follow, they are looking at a metric that they call that Bitcoin per share. And
Yeah,
you would think that with all the issuance of new stock, that per stock the Bitcoin per share goes down, but the opposite is the case. Right now, the Bitcoin per stock is actually almost at an all-time high. So basically, he would have more room to to inflate it even more. So my second part of that question is maybe for this year, is there maybe a playbook for? So we saw in the dot-com bubble, everybody that put .com into their name, I think Long Island iced tea or something, or
Man, that were
I
the
don't know.
good old blockchain days. Yeah, where just the name blockchain was pumping everything.
Yeah. And is it maybe possible that we see this playing out with both Bitcoin and AI? So I think what is this? The name of that company, Oral B, I think, they came out with a toothbrush with AI functionality. It's analyzing your brush pattern or what. I don't even know what it does, but it has AI in it. And the letter of intent that you just mentioned of this gold miner that is looking into buying Bitcoin, and both companies' stocks did fairly
Ripped.
well after their announcement. Could this be a playbook or something that we see a bit more this year?
I mean, I don't know. I don't think so because I mean, I think that's very much questionable from a legal standpoint. I don't know. I mean, I would be surprised if there wouldn't be some legal repercussions there. I don't know how the CEO
For
was okay in doing this. I don't know.
Yeah, for this company definitely, but there is a better way to do that. Like for example, in so we are closing the quarter in 4 days. Sunday
Yep.
is the end of Q1, and 45 days after, like we kind of like the normal way to do this is not a letter of intent, but you just buy it and you disclose it afterwards. That
Of
would
course.
be, yeah.
That's
Why?
legitimate. That's legitimate. 100%. Yeah.
And you're doing, you're not helping if you especially if you're a bigger company or if you're
No,
a
of
major
course not. You
player,
don't
if
want
you
to. No one would announce it up front unless you're trying to manipulate something. I mean, you would do this afterwards. Why up front? Makes no sense.
exactly.
I mean, in some instances, you have to do it for transparency, right? But I mean, I think none of these publicly traded companies buying Bitcoin have to do this for transparency. I think it's a bit of a different story within crypto in certain scenarios, but I don't think that, yeah, our outside makes any sense. Yeah.
Well, maybe to shift the topic, is chocolate going to be on the unaffordable sometime soon? What is happening to the price of cacao?
Man, so I tell you the craziest story ever. So, most weekends, not all weekends, but most weekends, I have friends over from all different like backgrounds. And a good friend of mine, he's a trader, and he trades only commodities. That's his specialty. And he trades. I mean, he trades this all this weird shit, like like cocoa, right? That's what he trades. And he kind of talks to me always like, dude, Julian, cocoa is gonna rip. And I mean, he told me this stuff so long ago. I mean, I would not be surprised if he actually told me this here somewhere mid 2022. Like really, maybe two. It could easily be that he talked to me about this 2 years ago. Really,
So everybody that's not watching, is the price of cacao basically
yeah,
10x, 8x
insane.
in
Yeah, yeah, 8x. And I think
few
he
months.
talked to me about this when Coco was still like in a flat line, and he was like, dude, like he does all this analysis and all this stuff where he's like, hey, that's he trades a little bit on chart, but he just really understands the market. Like he has connections to all these um, I don't know, deliveries and suppliers and supply chain and so on. Like that's his expertise, right? He really has the information up front. And so he talks to me about this, and I'm watching this Coco chart. I still remember this. I'm like, what a moron. Like, really, I was like, come on. I rather invest in crypto. Like, why would I invest into cocoa beans? Dude, and like, it's so hilarious. Just like last weekend, he was actually here again on Sunday, and he was like, did you look at the cocoa chart? And I was like, shut up. Like that was just my feedback, right? And I mean, he doesn't trade this thing all the way up. Like that's not him, right? He goes with massive leverage. Like he does 20x leverage or something and takes it in pieces, right? So obviously he doesn't go from the 2K to the 9K. That trade would be way too risky. But he really kind of does this in steps, and it was just hilarious. Kind of a good laugh I had together with him.
In his opinion, or do you know if there is a fundamental reason driving this? Like, is there actually a shortage, or was there a bad harvest, or is this pure speculation? What is the reason? Like, we see something like that every year. Like last year it was corn, the year before it was wood. Uh, yeah,
I mean, again, we didn't talk so much this Sunday about the reasons, but like really 2 years ago, it was all about shortage. Like he talked to me about these like harvest cycles and reasons on like this happens, I don't know, every couple of years, and then that was his explanation like 2 years ago, and he just said there's going to be such a massive shortage, and the harvest is not going to come. Yeah, and he says demand is going to stay stable, but we're just going to have such a shortage in production, and then yeah, I think I never paid attention to it. I really didn't. We didn't talk much on
Does
Sunday because it didn't fit, but he was just like joking about it.
so in the end, like I remember wood pumping very vividly in 2020
Yeah, but
because
that was during COVID, right, with the construction and so on. Yeah.
yeah. But I was on the receiving end, like
Mm.
several times I was buying wood and I was like, this is completely crazy. It's really in the supermarket, it basically 4x'd in price. And it became pretty expensive. Is there a chance that we are going to see chocolate basically 4xing in price
I
during,
mean,
I don't know, over the
I
coming
can.
months or?
I'll see him over the weekend again. But like one thing that he always taught me, and I just had some really interesting conversations with him on this. Um, he like said the reason, for example, because I asked him, right, I said, why don't you take advantage, for example, in crypto there's so much dumb money in trading, right? And I said, look, there are so many good traders who go into crypto because they can really collect all this dumb money in trading, and that's how they make so much money. And then he said the reason he doesn't do this because he is not per se such a good trader. He is really good on understanding the supply, production. And he has really good insights into, I think, like eight, nine different commodities, supply chain, production cycles, and so on. And he said for him in crypto, he has no upside because it's mathematically guaranteed. So what you have to understand there is demand. And he says demand for him is something that is like quite foreign in all his analysis on the commodity side because normally demand in the commodity side doesn't change so rapidly, right? I mean, like sure you have Easter, but in general the demand is relatively straightforward if we're not talking about rare earths, right? I mean, if we talk about rare earths, this is a bit different because suddenly you need these things for new things. But that was his expertise. So that's why he said he doesn't trade crypto. And that kind of opened a big, like aha moment for me because it really kind of showed how different crypto is from a value perspective, right? In comparison to other commodities. It's so different, right? Because all the other commodities really are defined on the supply side and rarely on the demand side. And on crypto, everything gets defined on the demand side. And I think that's such a huge aha moment for traders and investors. And he kind of opened that thought process for me as a comparison. Yeah. So I thought that was just such a good point.
Interesting. I still have a lot to learn when it comes to commodities. The only commodities
I mean,
that
I don't
I
understand
basically
commodities at all, like zero, really.
no.
That to me is, but look, it really comes down because you really need to understand the supply side. And that's something where if you really want to have an edge over everyone else, you really need to understand this. The good thing about commodities, though, right, is the illegal insider information part is actually relatively okay. Like, it's actually quite okay because you're not going to have so many issues there.
Hmm.
So I thought that
It's
was,
every single commodity is a rabbit hole in itself. Like I did some, I know a fair bit about gold, silver, and the uranium, and of course Bitcoin. But every single one of them is crazy. How much time you need to spend to just understand the basics of it. So yeah, definitely interesting what's going to happen with chocolate. Firat said he's stocking up on chocolate right now. I might do the same when just in case
man,
because
Easter,
my
Easter is
wife
around the corner.
is a big chocolate addict. Like she eats chocolate on a daily basis. Um, one other thing I briefly
Yep,
wanted to bounce with you.
please.
What do you make of the KuCoin news and the accusations, and also the CFTC's comments? Oh yeah, you already pulled it up on screen. What do you make of that?
Look, I think the US especially, but I think jurisdictions all around the world, they're going after the crypto platforms that didn't do proper KYC. And I mean it's kind of explained very clearly here that don't do proper money laundering prevention. I think that was what really killed Binance in the US right now. KuCoin, I don't know what other platforms didn't do proper KYC and money laundering prevention. That was one thing that on the bake side, and I mean, I want to be very clear. Up until like the last 2 weeks, we didn't even have an exchange functionality, but we always were really careful on the KYC side, on the money laundering prevention. So we've done, I think, and always a really excellent job. Uh, and yeah, so and that was always a really key focus. So this doesn't really come as a surprise. Let's see where this leads to. I don't know if they're gonna settle the like Binance is settling. Could be right. The two interesting parts that come out. I don't think it was a surprise, but yeah, I think most of us had expected this. The CFTC calls Ethereum and Litecoin in the lawsuit commodities. I think with Ethereum, we noticed Litecoin was always suspected to also be a commodity because at the end, it had a very similar launch to Bitcoin. It had what most people would call a fair launch, and it was again. There's no futures for it, but a lot of people who had always expected that for Litecoin. But it was very interesting to kind of see this here. I don't know. What are your thoughts?
So I think KuCoin is not the start, but I guess it's the second bigger player outside of the US that offered services to US customers that is coming into the let's say crosshairs of the US regulator. And it's not the first and it's not the last. And they're going to in my opinion they're going to go hard after them. If it's going to end in a settlement or whatever, doesn't really matter. But they're simultaneously, getting money, maybe in form of a settlement, sending a message, and they're probably going after others as well. And maybe just from top down, that is, KuCoin is one of the biggest exchanges, and they basically I don't know, a member of the CFTC or of the SEC, they even said if you offered services to US customer, you know what's coming, something like that. He said that in public, and like you saw this coming more than 2 years ago. Like we don't offer services to US customers.
Yeah, I think
Um,
even way earlier. And the other part was always the KYC issue. I think on both sides. I think that's the main issue. The main issue is the money laundering issue. It's being an exchange, right? That's also, I mean, we were until like 2 weeks ago, we were never an exchange. So that on top. But I think the main thing is really the exchange functionality and I mean, all these platforms, they just had really shaky KYC. I mean, or none. Like they had like two Bitcoin or something of. So yeah, not much surprise, I think.
on the comment from the CFTC, the thing that I just don't understand is how is it so difficult to give regulatory clarity? How, look, we have the SEC, we have the CFTC. Why can't they not just go and give, let's say, the top 50, classify it's either a security or it's a commodity? This is how it's going to be regulated. This
The
is how
SEC,
it's
you
going to be
mean?
taxed. Sorry.
The SEC, you mean?
Yeah, or just that it's basically two entities and both of them say something else. The CFTC was pretty, they were actually very solid in their communication. They were calling Bitcoin, Litecoin, and Ethereum a commodity from the beginning, and they still do. And the SEC is basically, they only really gave guidance on Bitcoin, and on all the other things, they kind of are in between, not answering questions, even in Senate hearings. So I don't understand why this is so difficult. And it would be, in my opinion, it would be helpful if they give guidance on these things. It doesn't really matter if you classify something as a security or as a commodity, but it kind of opens the door for taxing these things, regulating these things, on how companies are dealing with it. Why are they taking such a long time to give us guidance and kind of classify this as either or? Um, is it just because government inefficiencies, or is there a malicious agenda, or why are they? I mean,
No, I really think it's the government inefficiencies. I mean, I'm not the expert there, but from everything that I hear, the CFTC always says we don't see the problem here. Like, why? Like, for us, it's crystal clear. For us, what we see as commodities, we've been very clear. Um, yeah, I don't know. I think. I mean, one interesting part, if we talk about the Ethereum ETF here, because I think that's also where this goes a little bit. Of GBTC, sorry, of Grayscale, the Ethereum, like, or the ETF experts there. And I mean, I don't listen so much to the Ethereum maxis. about the probabilities of an Ethereum ETF because, and I shared it so many times. It's pointless listening to those because I mean for them Ethereum is the best anyways. Just like you listen to the Bitcoin maxis, Bitcoin is the best anyways. So you need to listen to people who really have the insights and who have a bit of a nuanced view. And here, his point of view, Craig Salm, is quite interesting, where he says, look, the reason the SEC is not really engaging with the ETF issuers for Ethereum is because all the issues here were already figured out with the Bitcoin spot ETF. And so I thought that was a very interesting point, simply because I've always been a bit more cautious, obviously following the guidance of the Bloomberg guys, the two, because they have been very cautious on believing that we're not going to see a May approval here. So quite interesting to see the CFTC kind of coming out saying, "Hey, listen, Ethereum is a commodity," and then kind of hearing on top that shouldn't have much of an impact on the ETF side. So I thought that was just quite interesting. I don't know if you have any additional thoughts on that, but that's just something I thought.
No additional thoughts. I think it's going to be a topic that is going to be with us at least until the later parts of that year, until we have clarity or an exact date or more infos on an Ethereum ETF. But we're definitely going to cover it as it kind of unfolds. I have two other points that I briefly wanted to bring up with you. So we had many. This news is kind of surfacing every few months, in my opinion, like twice a year or maybe 3 times a year. And it is the European Union banning, I think, anonymous wallets or self-custody wallets or transactions from or to them under 3,000 euros. And just most news platforms, they kind of gave this as it's already a done deal, it's already live, it's already happening, which is not the case. I briefly looked into this. It's at this point it's a bill, and it's the estimated time of arrival is probably within 2 or 3 years. But everybody that kind of has knowledge on it is kind of telling us that this is a done deal, that this will eventually come, that they are going after self-custody wallets. What does that mean? Does it mean if I own Bitcoin in self-custody and I'm a European citizen that in 2 or 3 years, can I just do 10 transactions of 2,999, or is that going to be a problem for me if I own self-custody? Do you have any thoughts or insights on that? I know for the fact that you have close connections to people in the European Parliament and to the ECB and so on. So, do you have some insights?
Yeah, it's very interesting. I mean, I'm not active in those work groups anymore, but I was maybe I think last time was like 3 years ago or something. Maybe I can't remember the exact time. But it was very interesting. I had an exchange on that last week, and to me, I think a couple of the crypto people misunderstand it a bit, and on the other hand, they really understand it. So it is definitely a push in the direction of the EU, and I don't think it's only the EU. I think we're going to see this globally, trying to limit anonymous self-custody. And I don't think that's much of a surprise. I think there's not really a surprise. What is to my understanding, and that was the exchange also, not fully correct, is that they completely want to limit it. They just want to be clear on the anonymous part. So as long as it's clear on who this wallet is, then the limits or the problems should not be there, or it shouldn't be as big. But the issues come if you basically have an anonymous wallet, a wallet that has never been KYC'd, or the source of the funds have never been properly checked. There, I think at some point you're really gonna have some massive issues. And the question is, right? I mean, there's going to be a bit of a flip side, and I mentioned this so many times. I talked about this, very interesting. I talked about this actually in my book, Cryptocurrency Simply Explained, a long time ago already. We're talking about 2016 or 17, where I spoke that the future in crypto will be a split system. There will be a segregated system. There will be the self-custody system, and there will be a custody system, and it will at some point be segregated. And I even speculated there may be a different Bitcoin price in either system. And it doesn't mean that one is higher or lower. It depends on the situation. If you have more of a gambling situation, the price in the custody system will be higher because more people are there. But if you have crypto crackdowns, if you need more insurance, if you want what crypto truly is, right? Like not the speculation part, but the escape of the traditional system, then it could easily be that people want to get into the uh, self custody part, and then that those coins could actually be worth more than those on the custodial side.
It's funny. Just a side note on that, but here in the Netherlands, we pay. We don't have capital gains tax, but we pay a wealth tax. If you're really wealthy, it's about 1.6% a year. And but a lot of Dutchies, they're kind of anticipating what's happening with non KYC Bitcoin, and they are already right now willing to spend a lot more if they can get their hands on non KYC Bitcoin. If this is a peer-to-peer transaction that is not from an exchange, not connected to KYC, they're already willing right now to pay a lot more for those Bitcoins, just in anticipation that they are going to get taxed otherwise. So it's definitely something to follow if you're here in Europe. And eventually, we kind of all knew this, that they want to tax us. They're not going to just there's a lot of people became fabulously rich with crypto, with Bitcoin, and of course the government, especially right now, they would love to have their share. Yeah, becoming a talking about fabulously rich, I think Donald Trump just became 6.5 billions richer overnight. Uh, uh, I think I don't understand the nitty gritty details of it, but maybe you have a bit more insight. But he
I
did a merger with his media
Yeah, it was
company
a
or something
spec.
like
So
that.
it was a spec that finally kind of consummated the transaction, and everything started happening. I have to admit I didn't follow it. I can't really share much on it other than obviously, yeah. I think the main news here really was Trump, and people just, I don't know, talk about it because of him. I think there was some kind of analysis that kind of asked why is the company worth so much, with I think 5 million users or something, and they compared this to all the other social media platforms and said it's quite overpriced. But I think it's so difficult. Honestly, anything that Trump is involved in, I mean, Elon is involved in. There are just a couple of people. Whenever these people involved in, you really need to, yeah, like you cannot listen to the general media, or you cannot listen to most people, because there's such a strong bias there in both directions, right? You have those where everything is great, and you have those where everything is bad. It's so difficult. So that's why I have this really dangerous kind of half-assed knowledge in this. So please don't take everything here at face value. I didn't fully follow that. Yeah.
Cool. That's these were all the major news that I kind of took note over the last week. I'm
Anything
sure
on
we will.
the DeFi chain side?
Yeah. So the negatives, maybe first, we have we had some consolidation during Q1, and a lot of things that are currently talked about are not specifically, let's say, price related or technical related. They're more um, it's a bit of I would call a lot is in somewhat connected to you and to using the two founders of the project, and to the let's say maybe a bit of the uncertain situation that Vegas company is in. So that was definitely one of the major talking points. And look, I can understand why people are kind of inclined to talk about that. And we also had Carl Chero here in chat asking about this. And I don't want to throw the ball to you here. Maybe I'm just, as an employee, going to add 2 or 3 cents to the topic. And am I allowed to share what I wrote on Slack, like paraphrasing it, not quoting it or anything, to like a few days ago? Or do I get into trouble doing that?
I don't know what. which part you mean. But I mean, looking at that people are sharing stuff from our Slack anyways. This probably got shared anyways. So I don't know. I
Okay,
haven't been
so
following. I only get the messages when people say, "Oh, this got shared. This got shared." So I don't know.
okay, yeah. So let me just add one or two things. Um, I'm an employee at the company, and I have in somewhat some benefits and some things that um, some things are really good as an employee, and some things are a bit bad, worse. Julian is CEO of the company, and the company is currently in a lawsuit, and that means that both the company and Julian they're kind of restricted in you cannot share things in public because the other party is going to use these things and kind of go against you. So that's one thing that you need to understand why Julian is not very vocal on the topic. If you're familiar with these kind of setups and legal battles, you would understand. I'm not involved in that lawsuit, so let me just share a little bit of a story. Um, I, of course, as an employee at the company, I feel some uncertainty myself. And I kind of took a little bit of a risk and I placed a message on our company wide Slack for everybody to read, where I addressed both of the co founders and I asked, hey, look, I feel a bit of an uncertainty right now, and I would love some clarity going into the future. And I asked both co-founders, "Hey, what is actually your plan for moving forward with the company and everything?" And I think 2 hours, 3 hours, Julian responded, and he's basically said the same things that he also said on Twitter in January and in February. The lights need to be. I keep the lights on. Salaries are going to get paid. All the things that I said in January and in February are still true. I've been with you in the trenches, and so on. So I waited 30 hours or so, and Yusin hasn't responded. So I placed a second message and I asked Yusin, "Hey, Yusin, I would especially like to hear from you because he hasn't been around in 4 months. He spent maybe a total of 4 hours in the office in all that time, and you saw the public communication that he did. He's very vague. He uses always kind of legal terms to where he can hide behind, like seriously considering, strongly considering, and so on. So I pushed a little bit more, and he finally answered, and he basically, copy pasted or said something along the line um, of this what he previously said. So I followed up once more, and he said, and his answer was he doesn't have time to answer to these questions. And now I don't want to jump to conclusions, but maybe you do your own conclusions as the audience. Um, if somebody is seriously considering to buy a company, wouldn't he take the time to address the employees of the company instead of answering to questionable anonymous accounts on Twitter and spreading not FUD because he's actually told the truth on Twitter, but even if you share the truth that is not helpful for the company, it's a very questionable action. So I just want to throw that to the community and to the audience of people listening. Jump to your own conclusions. You don't need me or Julian telling you what's fact. But for me as an employee, this kind of said a lot that somebody that wants to buy the company would take the time to address the community and its employees and kind of give guidance on the way moving forward. So yeah, that's the only thing I wanted to say. I hope this doesn't get me into trouble, but I think it's important. I know how uncertainty feels like, and I
I just want to.
know.
Can I just add one thing? We didn't discuss before that you're going to say this, and you said this out of your own, like, I just want to
Yeah,
be like. Can you just, yeah, clarify that as well? That
one
yeah.
100%, that's the reason why I asked Julian if I'm allowed to share. And I also didn't check with a lawyer or anything if this gets me into trouble. I'm willing to take the risks, but I think it's very important for the community to kind of know how. Look, I feel the uncertainty as well. So does Julian, so does any other employee. And I think sometimes it's important to understand why, especially you, Julian, cannot come onto making videos and saying, "Oh, this is happening and this is happening. I'm going to do this and I'm going to do that." It's like playing poker and laying your cards on the table for everybody to see. And you can get into trouble. I hope I don't get into trouble with the things I just mentioned, but yeah, I'm willing to take the risks. So yeah, that's the only thing I wanted to say
I
on
mean,
that topic.
considering all the screenshots that got shared, anyways. Uh, yeah,
Yeah,
it surprises me. Did your Slack post actually get shared
I don't think
publicly?
that anybody shared what I wrote. Um, yeah,
Kind of
I'm
narrows
not jumping
the
to
range of
conclusions.
people. Yeah, kind of narrows the range of people who potentially share our Slack post. Then,
Yeah,
okay.
yeah,
Yeah, maybe on my side, I just wanna again, I looking at the company. Um, I'm actually really proud of the team over the past 4 or 5 months. It was a difficult time. It has been a difficult time, but product wise, it's absolutely incredible where we are. We are about to launch the second version of the exchange, any pair into any pair, something that I don't know 6 months ago we were so far away from. We have now, yeah. Once all these troubles are behind us, the company is in such an amazing shape, and honestly, that makes me really proud of the team. That was really the team that's still here, kind of get it together over the past couple of months, build out all those things, do all those things. And I know it's a tough time right now. I get it. It's always darkest before the dawn. And that makes me proud. And so, really, from my side, look, I know I'm not doing much on social at the moment. And believe me, most of this is really just also because I'm working really hard and I want to spend time on what really matters right now, which is getting stuff done, focusing on the family, focus on myself, focusing on my health, on sports. But I really want to say thank you to the team. I want to say thank you to you as the community, people who are still here. I know it's tough. I get it. And a lot of people are the tourists, they leave. And so those that are still around, it's really amazing. So just want to say thank you.
yeah. Same for me. For everybody at the team in the community that is keeping up the spirits and the work. Shout out, much appreciated. There are better times ahead. I'm very confident that Q1 is going to be better than Q2 is going to be better than Q1. Yeah, definitely make sure to follow, subscribe us on follow us on Twitter, subscribe on YouTube. We're doing this every single week. It's also going to be, if you just tune in at a later point in, you definitely want to make sure to listen to the full episode, especially in the beginning. We were talking about the money printing situation and what assets you might need to hold to hedge this scenario. And yeah, thanks for tuning in.
Appreciate it. Everyone, subscribe, click like. See you next week. We just need to figure out the time. I don't know exactly if we're going to do 1 hour different in Europe or whether we're going to do it an hour different here in Singapore. We'll figure this out. But I think normally we always change the time in Europe because we play by Singapore time. Otherwise, my schedule gets completely messed up. With this, thank you. Have a good Wednesday. Happy Easter, everyone, to whoever is celebrating. I hope you're going to find all the chocolate, eggs, keep them and sell them in a year. Maybe they are worth 5 times more. Who knows? And yeah, see you next time. All the best. Cheers, everyone. Bye bye. Thank you.